Welcome to yet another episode of IA Talks AI. This week, we're not just talking the talk, we're doing the conference crawl. The Innovation and Operations Unit of the IA, that's also your podcast host, John, James, and I have been racking up the miles, diligently picking up bite-sized recordings of the latest buzz in AI and innovation in funds. We've got some fascinating insights straight from the source. You know, with all this talk about agentic AI and how it's going to revolutionize everything, I heard one conference organizer wondering if future conferences will be just a bunch of AI agents networking with each other. Imagine the dread of polite, automated follow-up emails. Well, good morning, John. Give us a scoop. What are we picking up in the conference halls this year?
Yes, it's certainly been a very busy time. And as the dust settles on that packed season of industry events, I think one thing is particularly clear. AI is no longer just a buzzword. It is the backbone, really, of innovation across the sector, alongside big conference themes like private assets and in particular digital assets, which are really coming to the fore as well. So whether it's been at tech-specific industry events on AI or industry-wide events where tech innovation has certainly been a major factor, we have been front and centre waving the flag for members and also the UK. So, as you say, we took along our microphone to capture views from attendees at some of these events on what were the major points they have picked up from the industry conversations. So, let's take a listen.
Sonja Laud, Global Chief Investment Officer, Legal & General Asset Management. If you were to look back 10 years from now, how the industry looks like today, what you would find is a very fragmented industry still. You would find platforms that underutilize technology and AI. You would find the cost of doing business going up due to changes in the client demand and to regulatory change. And you would find an ongoing relentless fee pressure. So that means fast forward 10 years, what the average investment platform needs to look like. Unified globally, extensive use of technology and AI in order to establish a seamless management of products and, of course, a facilitation of potential M&A so that you literally just slot in new propositions. What it would look like in terms of the use of AI, of course, if you consider that given the outset in 2025 that the industry has to radically rethink the cost structure, the use of AI would have to focus on, analysis and the way we are considering alpha opportunities, the portfolio construction process in order to optimize alpha budgets and to deliver the optimized outcome. And of course, in anything that is document reviews and of course document production. And of course, and probably most importantly, shifting client service to client experience, which means seamless access to public and private capabilities, and of course, real-time access to their own portfolios, analytics, and data.
I'm Stephane, Head of Global Regulatory Developments as well as Public Affairs at AXA Investment Managers. So, regarding technology developments and how it might impact our, daily way of working at AXA IM, I would like to spot in particular the development of artificial intelligence and how we intend and already implement the development of AI within our company. Currently at AXA Investment Managers, we have developed more than 50 plus use cases of artificial intelligence across the firm. And I want to insist that it's really across the whole AXA Investment Managers. For the time being, the idea is more to save cost or save time, to allow our colleagues to be more, efficient in their critical roles on a daily basis. Obviously, among those improvements, we are developing AI use by support functions, which is the obvious in legal teams, for instance, for scrutinizing, prospectuses of funds and so on. But I think it's very interesting to know that among those use cases, we have also developed some, facilitating tools at the level of portfolio managers. For instance, on CLOs, our portfolio managers may now start developing use of AI in scrutinizing the underlying securities that they may potentially invest in, which allows them to dedicate more time on their critical role of managing the portfolios themselves. So, and beyond POC or POVs, we have scaled up some use cases, including on those portfolio managers level regarding the use and management of CLOs. So this is, as I said, a really general approach. But beyond the use cases that I mentioned, what we think is very critical for AXA IM is the way we use AI in terms of governance. The first point is that this is the obvious. We want to have our own internal tools, and we have developed what we call a secure GPT in collaboration with an external provider, but keeping all, or at least a large part of our data inside to avoid any public dissemination of those data. This is the most obvious. But what is more, I think, critical for AXA IM is also to have an overall approach by committees dedicated to AI. We have 3 levels of committees dedicated to AI. We have what we call the AI Risk Committee, which meets every week and which takes place to register and update the list of AI use cases that we're developing on a running basis. We have also the AI Lab, which meets every month and which in fact executes the use cases which are proposed in the AI Risk Committee. And on quarterly basis, we have an AI Council, which takes, I would say, which draws the lessons from all the use cases we have developed at the level of POCs, POVs, or even scaling up. So obviously, in the 3 committees, the quality or job functions are very different from the most operational ones in the AI Risk Committee until the top senior managers in the AI Council. So we think that governance aspect is very important, is not according to what we see always as developed everywhere in the industry yet, but we think it's critical. Last point, we think that beyond industry players themselves, we think that AI may also improve the way of working of regulators. And I have just one case in mind regarding the French regulator, the AMF. They communicated publicly earlier this year about their wish to develop AI in making use of regulatory reportings. And so in that case of regulatory reportings, we know it's a potential burden for the industry, but we think that if the regulator or regulators in general may develop their own tools to optimize their use of the data we provide to them, it would be ultimately a win-win situation, of course for the industry, but also for regulators. So it's an opening aspect of AI use beyond the industry, but putting together the industry and regulators.
Good morning, I'm Rashid, the Chief Operating Officer of Findlay Park Investment Management. For an investment firm like Findlay Park, the single biggest opportunity AI offers is in the decision enablement and time saving. Specifically, I see AI transforming how we filter information or spot anomalies or ultimately direct human attention to what matters most. As you know, we're a high conviction active equity manager, so our edge depends on judgment, not volume. AI won't pick our stocks for us, but it can radically improve how we service relevant data, understand sentiment shifts, or detect outliers in company fundamentals or market narratives weeks before they hit consensus. You may ask and say, how do we do that? So, for example, right now, my data team, we're looking at how we can add a value to the investment team. An example of this is the investment team's ability to create primers. Typical time frame for an analyst to create a primer will take anywhere between a day to few days. And just if you imagine that particular analyst is going to do a visit in the US and go and see a number of companies, they then prepare a lot of data, go through that, and they can literally disappear for about a week or two. What we do right now today is that we have reduced the primer to no more than 20 minutes to create really, really effective, matured prime, equivalent to probably an analyst that have a few years experience in the industry. We have that today. We also produce things like questions that an analyst should be asking, the companies that they are visiting. Again, that's a huge time saver.
Hi, it's Glyn. I'm at the IA annual conference from FinServ Dynamics, and our group of companies assist firms in the UK, crypto and fund, with due diligence, distribution and compliance consultancy. We've heard a lot about AI usage here at the conference today, and often the conversation turns into one of AI replacing people. But what we find in our businesses is that actually what AI can do is accelerate and scale what those expert people can do. So we take the years of expertise that we've gained, and that's really useful stuff. It's good to know how to implement some of these processes, how to read regulations, how to put them into commercial practice. But what AI can do is take away some of the legwork for us. It can learn from us, and it can do a lot of the work that we might otherwise spend a huge amount of time doing. So it can analyze information. We find that it can create reports. It can do writing. It basically does all the things that we would do anyway, but it does them an awful lot quicker, leaving us to be a bit more useful in learning, in applying expertise, in talking to our clients, and in working out how we can be commercial businesses, but also very compliant businesses.
Hi, this is Edward Glyn, Head of Global Markets at Calastone, and I am currently at iEmpower Fund Forum 2025 in Monaco. Some fascinating themes coming across the industry at the moment. I think firstly, we are seeing a very large push for asset managers to rip unnecessary cost out of their businesses. Everybody knows that cost reduction is the purest form of alpha, and there seems to be a massive consensus across the industry to try and rip out unnecessary cost to put more money back into the hands of the end investors. In terms of some of the newer tech we're seeing, looks like everybody is trying to figure out how to better engage the end investor. I sat on a panel today with Martin Gilbert, chairman of Revolut, and we discussed how they'd managed to get 60 million clients very quickly in terms of reducing the cost of client acquisition, keeping those clients and providing more and more services to them. We're going to see a big race now in the neo-broker and neo-bank environment as they try to up their game out of just selling cash and mortgages into the investment arena. And we're starting to see the asset managers really pulling together to try and combat those new entrants into the marketplace. We're going to see a very big race now from the asset managers as they try to jump on the technology bandwagon by ensuring that there is much more of an Amazonization style of the asset management industry, understanding their clients better, giving those clients much more control, better front-end tools, views on what other people are buying, and moving much more from a product selling environment into a solutions provision environment. In terms of what they'll be buying, everybody knows that the mutual fund as we know it is 101 years old at the moment, and we're starting to see much more exciting solutions come out, both in terms of alts and private markets as well, but also leveraging new technologies such as blockchain to enable tokenized funds and digital investments. So great time here so far. Asset management firms really waking up to cost reduction, new services, Amazonization of funds, engaging the clients better, and just providing a much more compelling service to the end investor.
So good morning. I'm Daron, Pearce, the Executive Chairman of Tokenbridge. The question of emerging technologies like blockchain and its impact on the investment management industry is, I'd say, perhaps the hottest topic here at Funds Forum. There's an opportunity with the changes which DLT and blockchain can bring to the investment industry to completely rewrite the ecosystem and investment life cycle. It will reduce risk, it will improve speed and efficiency, and importantly, reduce costs. And that reduction in costs can really help asset managers who have been under significant margin compression for many years now. The adoption of DLT across the investment life cycle is going to take some time, but innovations such as the first mutual funds in the US being approved, Franklin's, Benji and Wisdom Tree's first money market fund issued on the blockchain, have begun to show that real developments can be deployed. Tokenbridge, company I represent, would enable retail investors to access multiple blockchain-issued mutual funds through a single portal. And the opportunity there is to aggregate tokens issued by any asset manager on a platform which is blockchain agnostic, enables a single retail investor to access all available tokens through a single window. I think it's important to say that as these technologies are deployed, new regulations, new operating models are inevitably going to be deployed. But at this point in time, the regulators seem to be looking for all of the current participants to maintain their roles. So whilst a DLT-enabled investment architecture need not have a custodian, need not have a transfer agent, the regulations as they stand require those roles to continue to exist. So it's going to be a very long time before the true end-to-end potential of distributed ledger technology can be realized by investors and by investment managers. Nonetheless, it will be the case that in time, those benefits will be realized. And in the interim period, perhaps a long interim period of parallel running will exist. Through that period, new players will emerge, companies will come and go, solutions will come and go. But what's absolutely irrefutable is that the underlying benefits of DLT will be realized in time, and it will change the investment management industry.
So overall, it's been a very busy time, conference season. Innovation, particularly technological change, really has been front and center to the majority of the discussions that have taken place at these events. You can continue to keep updated with the activity of the IA on these subjects through this podcast. Otherwise, we'd love to hear from you and have a good bilateral discussion. So please do like and share this podcast. We'd love to hear your feedback. And another episode will be along very shortly.